All right. Welcome to today's session. We're going to be going over the risk management blueprint for success and profitability. Now, what does that exactly mean? In trading, risk management is going to be arguably the most important thing that you ever use, because essentially what risk management is the way that you protect yourself from blowing an account. It protects you from losing um, too much money in a single day, a single week, um, you know, and it makes it so that way you will always make your losses back and more. So it's just the key to profitability, literally. It's like, the key to your lock. So we're going to run it down. Risk management blueprint for profitability. So the first thing is risking 1% per trade. Now, what does that mean? If I take a buy in the morning, okay? If I take a buy in the morning and I enter at this level here, I enter there, my stop loss is here, and my take profit is there. And entry, stop loss, take profit, I'm going to go over all of that later. Don't worry about that too much. Just worry about what I'm talking about with the risk factor. Let's say I enter here. I press buy here. The account size that I have, the amount of capital that I have on the account, I'm going to calculate what is 1% of the account, and I'm going to make sure that the amount that I am risking in this trade is 1% of that account balance. So if I have $5,000 in my account, I'm going to be risking 1%, which is $50. If I have 10,000, I'm going to be risking 1%, which is what, $75, I believe. If I have 25,000, I'm going to be risking 250, and if I have 100,000, I'm going to be risking $1,000 per trade. So 1% risk per trade. Now, the second rule is the 2 trade max rule. This is the most important one right here. 2 trade max rule every single day. You will not exceed 2 trades. Now, how do you not exceed 2 trades? If you take 2 losses in the morning, let's say today I took a sell, it didn't go my way, I took a loss, negative 1%. Let's say I take another trade because I reevaluated the market. I seen there was an opportunity. I took it and I lost. The market was not in my favor today. I am negative 2% today. Okay. That negative 2% on the day is the only negative that I will be for the entire day. That is the only amount that I will have risked for the entire day, because I'm done trading. 2 losses and you're done. That is your 2 trades right there, done. Now, you notice in the name it says 2 trade max. You will not always need to take 2 trades, because if you take if you take one trade and it's a winner, you're done trading for the day. Because it's too often that you will take a win and then you'll feel overconfident and you'll enter another position and you'll lose what you just earned. Okay, and you won't lose all of what you earned, but you will lose partials of what you earned. That is why you take one win, you're done for the day. If you take one loss and one win, you're done trading. That is your 2 trade max right there. Meaning that if you take a loss, okay, and then you reevaluate the market, you see another opportunity, you take it, and it goes your way and you win. You made back your loss that you just had and more. You're completely done trading. That's your 2 trades right there, done. And no trade during your time window, you're done trading. So that means that there's no trade that day. There's no trading. There was no opportunity, no setup formed. You're done trading. Now, time window, we're going to get into that later, more down the road, when we get into the more technicals and more intermediate advanced level of everything that I'm going to be teaching over the course of this boot camp. So This risk management blueprint right here is the only thing that you need to be profitable. And let's break it down on a deeper level. Let's say that I have a 100K account, okay, and your risk is 1%. Okay. On a 100K account using through a prop firm, let's say you're using it through a prop firm, you're going to have a daily limit loss of 5,000, daily loss limit, and an 8,000 max overall loss limit. I believe that's correct. Let me double check that it's 5% and 8% for the daily and max, because if it's not, I want to make sure that it's 100% correct, because that's how we're going to be 100% accurate for this representation of how risk management is so important. So let's see. Home, new challenge, two-step trade locker. Let's see the details here. 5% maximum daily loss and 10% maximum loss. So you actually get 10% maximum overall loss. So that means that on a 100K you get $10,000 max overall loss. If you're blowing that, that means you're gambling. I'm just gonna say that right now. So you get 5% daily and 10% max overall. So on a 100K, these are the data that we have. Okay, so you cannot exceed $5,000 loss in a single day, and over time you cannot lose $10,000 max overall. So if you exceed either one of these, the account is gone. So I'm going to break down how you will never blow an account, how you will only pass an account, and how to stay disciplined to those rules. Okay, so here we go. Let's say you get this account. First trade you take, you risk is 1%, and it's a loss. Okay, first trade, and it was a loss. You are now negative 1% or slash $1,000. Okay, let's say you take a second trade. You risk 1%, always 1%, and it's another loss. This is hypothetical. It usually is not like this. You are now negative 2% overall, and you are down $2,000. Okay, so you're already down $2,000 on the account. Okay, next day you come back. First trade you take, your risk is 1%, and let's say it's another loss. Okay, you are now down 3% on your account already. But this is the beautiful thing about risk management. $3,000 sounds like a lot, but I don't think in numbers. I think in percents. I'm looking at the 3% that I'm down. I'm only down 3%. Now, the second trade I take of that day, you risk that 1%, and you target a 1 to 3. I always target a 1 to 3. If I feel like price has a draw on liquidity and I can take price further down, I will target more risk to reward, which means that I will target a higher profit target. A 1 to 3, real quick, let me just explain this, and then I'm going to explain the risk to reward factor so all of this completely makes sense. So the next trade you take, you win, okay? I meant to put win. You win. You are now, and let's say you targeted a 1 to 3, you now earned 3%. So guess what that makes you at? That makes you at $0 lost. You are now at break even, okay? Over 3 trades you lost, you won 1 trade and you made $3,000 back in one single trade. So the prior 3 trades made no difference to your account because you are now back at break even. Let's say the next day you come back. The first trade you take, your risk is 1%, and it's another win. Usually after a few losses, you will have those wins rack up. That's just how it is. Let's say you targeted another 1 to 3. You earned a 3% win. You are now positive $3,000. In just 2 trades, you brought yourself back to break even, and you are now in profit $3,000. Okay? So this is why the 1% risk and 2 trade max rule are so crucial, because you can see that over the course of these 2 days right here, and these trades were all taken within the course of 2 days. So this is day number 1, and this is day number 2. Okay. Now, daily loss limit, you cannot exceed $5,000 lost in a single day. Well, if each day, each of these 2 days, you only lost $2,000 this first day, daily loss never got violated, max never got violated. You come back, the daily refreshes every single day. That's why it's daily loss limit. So it refreshes. So after you lose 2,000, it moves over to your max the next day, and it erases from your daily. So you have another 5K to lose that day. Or not to lose, but you have another 5K that you are able to lose within that day. Now, day 2, you come back, you lose another trade. You're now down 3,000, but daily you're only negative 1,000 because on the new day, day number 2, you lost another trade. You risked 1%, you lost $1,000. Out of 5,000, you're only down 1,000. So you still have $4,000 left on the daily loss limit. The second trade you take, though, you win, you make that 3%. You are now at break even, so your max overall loss limit is gone and your daily loss limit is completely wiped. So you now are back down to square one, back to break even. Then on day number 3, as that first trade that hits, you win 3,000. So now you're in profit 3% on the account. So that's what I want you to wrap your head around. I want you to understand that without risk management, your account is done. You have no rules to follow. You're going to blow your account because you don't know how much to risk. Well, this is how much you risk. Risking only 1%, taking 2 trades max per day, that's all you need. And remember, one of the rules is if the first trade you take for the day is a winner, you're done trading. So day 3 is done. We made $3,000. We're done for the day. That's it. So we come back here. 1 win done rule. We'll take 1 win, stop trading. So that means day number 3, we're completely out of the market for the rest of the day. You can go enjoy your day. You can go do whatever you want to do and have a good day, you know? So that is why risk management is so crucial. Following these rules that I just gave you will keep you profitable. You will never violate the daily loss limit, and you will never violate the max overall loss limit. Okay, so if you have any questions, let me know. I'll break something down that you didn't quite understand into more detail, into more depth. I understand that I probably didn't explain a few things as well as I could have, but if you do have questions, let me know, and I will break it down even further. Hopefully this made sense. I did say I was going to break down risk to reward, didn't I? So let me go over that really quick. So in a trade, risk to reward, risk to reward. It's in the name. How much are you risking versus how much you're going to gain? What is your reward versus how much you risked? If you hear somebody say, or if you hear me say that, I hit a 1 to 5 today, all that means is that I risked 1% to make 5%. So when I place this down, you'll see that it says short position. That means sell. Short means sell. Long position means buy. And you'll notice that the red is on the bottom for a buy and the red is at the top for a sell. We're not going to focus on that right now, okay? We're only going to focus on the risk to reward idea about this. So if I'm risking 250, okay, I'm risking 1%, okay? So here's our 1% risk. Change it to black and top. Okay. So we put a 1% risk. I'm risking 1% to make 5. When I say I made a 1 to 5 today, that means that I risked 1% to make 5%. So you'll see the middle number. It says right there, risk reward ratio. That means that price, I analyzed price. I analyzed the candlesticks here. So we'll go down to the candlesticks. And that means that these candlesticks gave me data that showed me that I can potentially target a 1 to 5, meaning that I seen areas where price would want to go and make a 1 to 5, meaning that I felt confident that I can risk 1% to make 5%. The base risk to reward ratio is 1 to 3. That is the average of what a lot of traders risk. They only risk 1% to make 3%. But price will give you a lot of times, it will give you data that can show you that it potentially wants to go either lower or higher depending on what you're doing. So if I'm selling and price gave me a lot of data that shows me that it can go even lower than a 1 to 3, I will target those lower areas since I'm selling. So I want price to go lower. So if I see that it has potential to go even lower, I will target out those lower levels. So I made a 1 to 5 rather than a 1 to 3. So I made 5% on this trade. Same thing with the buys. If market gave me data that it wants to go even higher than what a 1 to 3. So here's a 1 to 3. If price give me data to the left that it can go potentially even higher and target out a potential 1 to 5 or whatever it may be. You can target out however much you want if it makes sense. If I seen that it makes sense to target out a 1 to 5, then I risked 1% to make 5%. So that is risk to reward. So when I say that you made a 1 to 3 on day number 3, that means that you risked 1% to make 3% and you made your money back. So on day number 2, since I made a 1 to 3, I risked 1% to make 3%. The 3% loss that I had on the previous trades, it's completely gone. So 3,000, okay, negative 3,000 plus 3,000 is 0. So that means that I am now at break even. So the next trade that I make, I did in fact hit a 1 to 3. I made $3,000. So now I am in profit $3,000. So that's all risk to reward means. It's how much you're risking to how much you're going to gain for that risk. So that is exactly what risk to reward is. That's the quick breakdown. I want to make a separate video on the limit orders and all that stuff, like what these are and everything like that. So, but for now, the risk management factor, I hope it made sense. And like I said, if you have questions, let me know. And the next video, I think we're going to get more into the market structure basics, back into episode number 3 for the market structure basics, and dive deeper into what's next for that. So I hope you enjoyed this. I hope this was informative, and let me know if you have any